This is an educational example based on my personal approach. Results vary widely, and nothing here guarantees profit or future performance. Before we get into today's video, would you do me a huge favor? If you're one of these 44,000 viewers that is not yet subscribed, will you take care of that now? I'll wait. Hello, everybody, and welcome to the Trading with Ashley show. This video is going to be packed with information to give you a lot of great information about AI infrastructure plays that large corporations are actually paying attention to. Some of these companies are actually SaaS companies. You know, when software took a tumble here recently, a lot of good companies got pulled down with it. And I think the market is starting to realize that they actually threw the baby out with the bathwater. So we are going to go through 4 particular companies that do different things for the AI infrastructure that I think are being overlooked and that could run really well in the coming weeks. Now, if we have more market pressure, it should come down even more. And I have my list of stocks that I am going to trade. This is just 4 of them. If you want all of them, join my community and I call out my trades real time when they happen. Speaking of trades, I am going to give each of you a trade for each of these tickers. I actually am doing 3 different trades on each ticker, but because this video is only about 15 minutes long, I only have time to give you one of the trades. If you want the other trades, join my community. You'll get those trades plus a whole lot more. Now, when we're talking about data, various companies play different roles for the data. You have an important company I'm going to go over that actually structures the data. Another company that I'm going to review with you actually analyzes the data. Now, it's critical that there's a company that can actually turn this data into profit, monetize it. I'll be taking you through that company. And finally, I'm going to be talking about a company that I don't know that you've been exposed to before. This company actually fuels data. Got some really good trades to go over with you, some really good fundamentals to discuss. Let's go jump into it now. The 4 tickers I want to discuss with you are Snow, Palantir, Zeta, and Rambus. Now, each of them have a role in the ecosystem. Think about it as an AI pipeline. Snowflake organizes the data. Palantir analyzes the data to find insights. Zeta helps companies monetize those insights and generate revenue. And Rambus powers high-speed memory and data infrastructure that allows the engine system to run. We're going to break down each of these tickers and evaluate them, and then we're going to look at a potential trade. Snowflake has experienced significant revenue growth driven by its expanding AI portfolio and strong customer adoption. However, the stock is facing some challenges, including a 19% recent decline over 3 months and ongoing legal scrutiny regarding its disclosures. But you can't ignore how important this particular company and what they do is to the AI ecosystem. Let's look a little bit closer. You can see right here that their revenue does continue to grow, which is very encouraging. And then look at their earnings. They continue to outperform on earnings. This is very encouraging as well. This stock is currently trading below all of its price targets. If you look at the range of price targets, the 176 all the way up to 500. The average price target is 241, so clearly this is undervalued. If we continue to be under additional pressure with the market, this could go into deep value territory. From a technical analysis standpoint, let's look a little bit closer. Something that is encouraging, you see this 200-day moving average? It is ever so slightly trending upward, and that is actually encouraging, especially since it's trading under its 200-day moving average. Looking at the RSI, it's currently at 48, just under 50. So if we move above 50, it might start heading up, and if it reconquers this 200-day moving average, that would be very encouraging. If it stays under 50, it might want to head down to 30, getting it into oversold territory. If you look at where it's trading in its Bollinger Bands, you can see that if you were to shoot for the bottom of the band, it'd be right here about 160. If you come down just a little to around that 150 mark, you can see that there is former support there. So let's go look for some deep value trades looking at somewhere between the 150 and the 160 strike price. If I want to sell a put on Snowflake, especially if it's under pressure, I'd want to go out to 417. That's about a month from now. And if you focus right here on this 160 strike price, you would receive $5.48 at this moment in time for putting up $160 a share for this stock. So if you were to take this trade, that would be a very good return at this point. That's about a 3.4% return in 1 month. If you annualize it, you're over 40% annualized. Now, what will happen is if this stock on its expiration date is trading at 160 or below, you will actually get the stock. If it's trading above 160, then you just keep this $548. Now, if the market is under pressure and Snowflake goes from where it is currently trading at about 177 and comes down to around the 165 mark, then this will increase significantly, making it an even better value. If you want it to be more conservative, you could look at the 155 strike, 418 is what it's paying now, or even the 150 strike, it's paying 328 now. But remember, if this is under pressure, these strike prices will offer even more premium. Next, let's analyze Palantir. This is where the data analysis comes into play. Now, Palantir has had a lot of great news lately. They have inked new deals with NVIDIA, Ondas, GE, Aerospace, and Centros, just to name a few. If you look at the PE ratio, this is the Achilles heel of Palantir. Currently, it's much more reasonable than it has been. It's at 239, but it's still the highest of all the stocks in this space. Let's go look at the analysis. Let's take a look under the hood. This is another beautiful chart when you look at revenue versus earnings. And when I was actually trading Palantir, it had not even been GAAP profitable for 4 quarters in a row. And if you look at their earnings, they continue to outperform with very aggressive forward guidance. This is definitely one that if you have not taken advantage of the recent dip, then you have to question if you really want this stock, because it has given you some incredible opportunities in the last couple of months. Now, unless you're Michael Burry, who gives us about a $65 strike price, current analyst price targets average about 186. Looking at Palantir technically, again, it has an upward sloping 200-day moving average. That's very encouraging. It's still trading under its 200-day moving average. The RSI is over 50, so we're at 56. There's a lot of room for this stock to run. Currently, we're trading towards the top of the Bollinger Band, but every time we're over 50 on that RSI, I look for a fair entry somewhere around the middle of the band, somewhere around 140 is something to consider. If you wanted to be a little bit more aggressive, you go all the way up to 145. Let's see what premium it's paying for these strike prices. Going out till April the 17th, about a month from now, if you focus right here on this 145 strike, currently you'll receive $6.35. That's $635. for putting up $14,500 to buy Palantir at $145, which would be a very fair price. This is going to be about a 4.3% return in 1 month, which is around 52% annualized. So either you get Palantir at $145 or you keep the $635 come April 17th. Now, what I like about Zeta is it offers something very important to the AI ecosystem. It actually gives companies that use Zeta an opportunity to make money. Let's look under the hood. Now, even though this stock is a lower cap stock and the price is very reasonable, if you were trying to learn how to trade, this is a fun one to trade. Let's look at the revenue versus earnings. They are bringing in significant revenue. This is encouraging. And they're also bringing money to the bottom line. Now, when you look at their earnings, they continue to outperform on earnings. So this is very encouraging. It's really hard to find these companies with a lower price that actually are profitable. So I really like this one. It's a great way to learn how to trade the wheel strategy if you want to try to get into the wheel strategy, but you don't want to risk a lot of money. From a technical standpoint, Zeta is in a really good spot. If you notice the RSI, it's right down here. We are at 50, so we're just barely over 50, but that does show that we have some bullish momentum going. And if you notice right here, the 200-day moving average, we're sitting right on top of it. I always like to zoom out just to ensure that the 200-day moving average is moving up, and it is ever so slightly. But then if you look a little bit closer, you can get a better idea of what strike price may work. Now, again, I do love this stock for traders that may be wanting to learn the wheel strategy. It doesn't require a lot of capital, so they can really start to better understand how selling puts and if they're assigned selling calls work, and they're not risking a lot of money. So if you look right here, being over 50 means that the middle of the band, which is right here at around that $17 mark, that seems to be a fair entry. Now, you can be a little bit more conservative if you want to come down to the middle lower part of the band. That might be a good spot to get it as well. But then if you want to be the most conservative, you'd want to come down here to around the $14 mark. Let's go look at the premium that it's offering so that you can consider if you want to take the trade. Once you get to the option chain, if you go with 417, which is about a month away, and you focus on this $15 strike, you will receive about $42 at this moment in time for putting up $1,500 to take the trade. Now, at first glance, they may not seem like a lot of money, but from a return standpoint, it's actually very respectable. So if you consider the $42 for putting up $1,500 of capital, well, if you annualize that, that's over 33% annualized return. So this would be a very good spot. Now, if you want it to be a little bit more aggressive and go with that 1750 strike, that's going to be a significant return. There is a bigger risk. You see the delta here is 0.39. So there's a pretty good chance you're going to end up with Zeta if we have any kind of pressure. And you may want it. It looks like it could be a great company moving forward. If you were to take this particular trade, that is going to give you about a 7% return in 1 month. Now, this does change based on movement of the stock. So just be aware. But at this moment in time, at the time of recording, it would be about a 7% return. And finally, let's take a look at a ticker symbol you may not have heard of or traded before. This is RMBS, Rambus Incorporated. They're only a $9 billion company, so there is a lot of room for them to grow. But what's impressive about Rambus is that they actually have several patents, and some of their largest customers are Samsung and Micron. One look at the analysis tab, and it's actually getting your attention. This one is one that you can see why you might want to start accumulating, especially if we go under some extreme pressure in the market. Looking at their revenue, they have very healthy revenues, and then they're also bringing the money to the bottom line. That's very important. They do continue to outperform on earnings. That's very encouraging. And the analysts that have evaluated this company, the price target is averaging around 118. So you were getting this at a very fair value if you were to accumulate it now. Let's go take a look at the technicals. If you look at the stock technically, it's at a very interesting spot. It's sitting right on top of the 200-day moving average, and that is sloping up, so that's very encouraging. If you go in a little bit closer, you can get a better look. Not only is it sitting on the 200-day moving average, there's a cluster of candles right here, so it really does like this area. If it holds support, this is going to show you that it's ready to go off to the races. But if it dips down further, which it could, it looks like something around 82 would be the next level of support. If you notice the RSI, we are at 41. So if we have more pressure in the market, it could push this down further. Let's go take a look at what we can get for premium. Going to April the 17th and looking at the 85 strike, which would be a very good deal based on everything I just looked at, you will at this point in time get about $620 to take this trade. You would have to put up $8,500 to assume these shares at the $85 strike. That's an incredible return. Currently, that is offering about a 7% return in 1 month, which annualized brings you up to 87%. And this is not a heavily traded stock. So the option chain is going to have a wider bid-ask spread. So you might do better by putting in a limit order and just waiting to see if you can get a fill. Now, for those in my community, I actually have quite a few trades that I want to show you on this ticker symbol because it has so much promise in the future. I hope that inspired you to actually look around the corner on certain ticker symbols, especially if the market has dropped it like a hot potato, just because. If you can see that it has a future, don't be afraid to invest in it. Don't be afraid to trade it. Remember, if you're with me, trading with Ashley, there is no trader left behind. Knowing you want all the other trades I'm going to be doing on those particular tickers and a whole lot more, just sign up for a strategy call below. I would love to personally welcome you into the community. If you want to watch another video I did looking at various ticker symbols, you can watch that video right here.